All right, welcome to Talkin' Investing. I'm Tom, and as always, this is not financial advice. Today, I want to talk about Skillz, stock ticker SKLZ. They recently put out their Q1 2022 earnings report, and in my opinion, this is one that we need to really take a look at. So I want to dive into this. This company has some good news and some bad news. They have some legitimate problems that we really need to talk about. So if you're invested in Skillz or interested in Skillz, then this is a video you should probably watch. We cover companies like Skillz, small cap, high growth stock companies all the time on this channel. So if that's content that you're interested in, please subscribe to the channel and hit the notification bell. Also, if everybody would please smash the like button, it helps the channel out a lot. And in our pinned comment, you will see a link to our free Discord where we discuss these types of stocks all the time. We've got about 600 people over there. So with that said, let's talk about Skillz. Okay, Skillz right now is trading at $1.63. I'm in the middle of the trading day here on Monday. And so it's down about 6% today. And that is mostly just because the market is down today. However, you'll see Skillz 52-week range is from $24.88 all the way down to $1.38. So they're just a little bit off of their lows at $1.63. But these earnings came out on May 4th. And subsequent to then, this company has taken yet another leg down and hit new all-time lows. So this has been a theme for the last 6 months now, and it just does not seem to be getting any better. I've done several videos on Skillz, and I've been pointing out that they have one big problem, but now I'm afraid to say that they have more than one big problem. I think that they have two problems, which is causing a third problem. So I want to go through all of those and discuss what I'm seeing, but I also want to talk about the other side. They do have some good things going on. You know, if you read their shareholder letter, you would think they just had the best quarter ever. They're very optimistic. They made some big deals in the first quarter. So I'm going to go through the good and go through the bad, but we got to take an honest look at this one because I do think that something has fundamentally changed over at Skillz, and I'm going to go through and tell you what that is. And if they don't fix it, then I'm afraid they may be in trouble. Okay, this was their press release. Skillz announces Q1 2022 results, paving the path to profitable growth. Let's just quickly go through what they talked about. Delivered $93 million in revenue with higher marketing efficiency resulting in $17 million improved. Delivered $93 million in revenue with higher marketing efficiency resulting in $17 million improvement in adjusted EBITDA over Q4 2021. So sequentially, quarter over quarter, their EBITDA improved by $17 million. So that's the good news. The bad news is their revenue decreased. We did know that was coming. They told us that in last quarter's report is that they need to shift gears. They have a big problem in marketing. We've talked about this in every single video that I've made. First, I want to go to their income statement and talk about the marketing problem because this is really the core of all of their problems. And again, we've talked about this in previous videos and they keep telling us it's going to get better, but I'm afraid it's not moving fast enough. I'm going to jump right to the income statement. This is the 3 months ended March 31st, 2022. So I want to take a look at just a few numbers. Revenue was $93 million. Sales and marketing is $117 million. So this has been their problem. Forget their cost of sales and their overhead and everything else. Just in sales and marketing, they are spending more money than the total amount of revenue. They have been doing so for the last at least 6 quarters in a row, and this has been a continuous problem. It escalated dramatically in the fourth quarter, and we'll go take a look at that real quickly because I want to compare quarter over quarter. So last quarter, I threw up a bunch of red flags, but they came out, really addressed the issue verbally, and said they were going to improve, and to some extent they have improved. However, I'm afraid it's not going in the right direction fast enough, and now there's another problem they're having that is accelerating this issue. Sales and marketing was about 125% of revenue, so they still lost about $78 million even without that. But what I want to compare is if we look at the 3 months ended December 31st, so this is quarter over quarter, so this is sequentially. They had $108 million in revenue in the fourth quarter. That dropped down to $93 million in revenue. So we don't like to see a decrease in revenue. They did warn us that this was going to happen in an effort to reduce their marketing expense, which they did. In the fourth quarter of 2021, their marketing expense was 142% of revenue. So that was a nightmare. That was by far the worst quarter they've ever had In the past, it was tending to be somewhere between 110 and 115%. Popping up to 142% was a disaster. So they really focused on the fact that they were going to try to improve that. Now, technically, they did improve it. It's down to 125%. But the problem with that is, excluding Q4 of 2021, that's still their worst quarter. They were doing much better than this. And I want to look at 2 quarters ago just to show you what I'm talking about. So at the 3 months ended September 30th, 2021, they had $102 million in revenue and $114 million in marketing. So we are now 2 full quarters later, and their revenue is down from $102 million down to $93 million, and their marketing is up from $114 million to $117 million. You know, quarter over quarter sequentially, they did much better than the fourth quarter, but the fourth quarter, honestly, in my opinion, was a train wreck. And I think the market agreed with me. At one point, then that day of earnings, Skillz was down about 40%. It ended up, I think, down 20% on the day. So that was obviously a very bad quarter for them. So they're another quarter later, and they still haven't even gotten back to where they were 2 quarters ago. This leads me to the next problem, which puts a clock on this whole situation. When I started doing videos on this, it looked like they had somewhere between a 5 or 6 or 7 year cash runway. Their cash burn rate has increased considerably. So when I talk about stocks and due diligence, and I always say, please do your own due diligence and know your stocks. One of the reasons to know these stocks is if there's a fundamental change in what's happening in the company, that could change your opinion on whether or not you want to hold this stock or not. You know, only you guys can decide that, but in my opinion, this is actually a fundamental change in the company. And that is their cash used from operations in Q1 of 2022 was $83 million. That's more than double the same period last year. I'm going to go to a chart and show you why I think this is a fundamental change in what they're doing, and they need to show very quickly in 1 quarter or 2 at the worst that they can reverse this trend. Okay, this is just a little schedule I put together. This is their cash flow from operations by quarter, and obviously it's a net outflow each quarter. So their operations are using cash. And if you look at 2021, Q1 was $39 million, Q2 was $25 million, Q3 was $38 million. So these were the periods where I originally started talking about this stock. You'll see in Q4, all of a sudden this jumped to $76 million. So that's basically a double. So 1 quarter does not a trend make. So, you know, you're hoping this is an anomaly. However, unfortunately, 2 quarters does make a trend. This did not get better. It got worse. They went from $76 million of cash used in operations to $83 million of cash used in operations. So on the average, the last 2 quarters are way more than double the previous 3 quarters below that. So more than doubling your cash burn rate is a significant change in your business model. So when they said they were going to get better at marketing and they were going to decrease their marketing expense, I did not expect that that was going to result in a massive increase in their cash burn rate. What looked like maybe a 5 or 6 year cash runway could be as low as a 3 or maybe even a 2 year cash runway if they can't solve this problem. So time was the biggest thing that I thought was on their side. They have made a lot of good deals. They've got a lot of progress going on in other areas, but if they can't fix this marketing problem and they're accelerating the rate at which they're spending their money, then this greatly increases the probability that they will run out of money before they get to the finish line. That is not a problem I was worried about when they had a 5 or 6 year cash runway. It is now a problem that I am definitely worried about. So for me, I'm going to be looking at this stock. The main thing that I want to see next quarter is 2 things. Number 1, they need to continue to trend in the direction where marketing is a smaller percent of revenue. Ultimately, obviously, marketing needs to be a lot less than revenue. But right now, if they could just get those numbers even, that would be a massive step in the right direction. But more importantly, I want to see this cash burn rate go back to where it was. If they can't get back to this $40 or $50 million area, and this has turned into an 80 or 85 or worse, then they are burning cash, and I don't know that they can get to the finish line. So they mentioned we ended the first quarter with $653 million of cash. So when we go back to the schedule, to put it in perspective, it's not like they're going to run out of cash next quarter or even within the next year. So this is not imminent, but with $653 million, you know, an $80 million a quarter cash burn gives you only a couple of years of runway. So that's a drastic change. So I don't really need to look too much further. We could dig into these numbers in a lot of different ways and talk about user acquisition and user retention and all those things, but honestly, if they can't reduce this cash burn rate, none of that matters. So to me, there are two core missions for them right now. Reduce their cash burn rate back down to levels that it was at for most of the year last year, and they've got to continue to reduce marketing as a percentage of revenue. And like I said, in my opinion, they are running out of time to do so. So this is something that they have to address immediately. I will say most of their literature, their letter to their stockholders, and their summary of their quarter, it was very upbeat and very positive. And okay, I understand that. They certainly don't want to come out and be negative, but I do wish they had addressed these issues more and talked about cash flow and talked about a plan to reduce this cash burn rate. So that leaves me in a situation where we're going to have to just wait for next quarter's results and see if there's a third quarter in a row that's in the $80 million range of cash burn from operations. I will consider that trend confirmed, and that will be a fundamental change, in my opinion, in the operations of this company. So on March 23rd, they announced that the UFC entered a multi-year partnership. Now, this is in addition to the fact that they will be launching an NFL game prior to this NFL upcoming season. So they now have a relationship with the NFL and the UFC. These are two of the larger sports organizations in the world. So this is the positive side of what is happening. But if they can't leverage this sooner than later, then I'm afraid this cash burn rate is going to eat them alive. But I did want to mention, there are positive things happening. Here's what's happened to Skillz. This is Skillz on the weekly time frame. From their high back last February until today, this company's down 96%. Even if I ignore all that and go from June of 2021, where they were down already 50%, the stock's still down another 93% since then. This stock came into 2022 trading near $8. So at $8, they could issue more stock and create a longer cash runway for themselves. At $1.57, that option is pretty much off the table. So raising equity is pretty much off the table. I don't see how they could raise debt. They don't really have any collateral. So what that means is this $653 million that they have, this has to last them until they get cash flow positive, in my opinion. If they keep spending $80 million a quarter, they're going to run out of that sooner than later. So to me, this all boils down to two things. They've got to find a way to keep their users without having to spend so much money on marketing. So they need to change their marketing to revenue ratio, and they need to reduce their cash burn on a quarterly basis from operations. Those are really the only two things I'll be looking at in the next report for the most part. If they can't change those dramatically, then I may be changing my position on this company. So most people, it looks like, have already changed their mind on this company. Is down 96%. At this point, I'm going to say we're in a wait and see mode. So they've got some work to do. Again, they've got the UFC deal, they've got the NFL deal. So there's a path to success, but it's getting narrower and narrower. So that is my update on Skillz. Please, again, this is not financial advice. You guys need to do your own due diligence. If you made it this far, please remember to subscribe to the channel and smash the like button, and I will see you in the next video.